Hi everybody, it's Jeff Williams again here from Action Coach, helping you to grow your business smarter. And this is one of a series of videos we're doing are all around the finances in your business. And oftentimes business owners, when we talk about finance, tend to glaze over a little bit. Finance is something which we normally leave to our accountant, and we look at it at the end of the year, and our accountant tells us how much profit we've made and how much tax we have to pay. But apart from that, we don't look at the numbers in our business. What I'm going to tell you is that knowing your numbers is vitally important to your business. Okay, not only to the success of your business, but also to the survival of your business. We need to know the numbers in our business and be in control of those. You see, the language of business is actually numbers. Everything in business has a number. Let me ask you, how many sales did you make last week? How many customers did you see? How many quotes did you do last week? How many of those quotes converted into customers last week? How much time have you got left? How many days have you got left to do the work for this month that you're working in? How much profit do you make on each job? Now, we really need to know how much profit you make on each job, not just how much profit you made at the end of the year. So the numbers in our business, they're the language of business. And to most people, the numbers in business are like Greek. It's like being in the middle of a roundabout in Athens, deciding where you're going to go, but you look at all the signs and literally they're all in Greek. You know, those Greek characters which we can't read, alpha, beta, delta, put them all together and we're all a bit confused. Shouldn't be the case. We shouldn't be numbers blind in business. So over the next few videos, we're going to talk to you about how to understand the numbers in your business, the key numbers. And there are three key statements in your business, three key documents that you need to understand. I'm going to explain them all. One of them is looking back at what happened. That's your profit and loss account. So it's called a profit and loss account because looking back, when you have to account for something, you're accounting for what happened in the past. When you get your accounts, so looking back, that's what this is. I'm going to talk about that in a minute. And the second document is your balance sheet, and that tells you what's happening right now, what's happening in the present. Okay, we'll explain that to you. That's sometimes mystified to people. We'll explain exactly what that means, what it is, and how to use it, how to get the best out of it. And the other document, looking forward to the future, is a forecast, and it's about the cash, how much cash we've got in our business. Cash and profit are different things. I'll explain to you what I mean by that when we look at that, but that's looking to the future. So you got looking to the future, which is your cash flow forecast. What's happening in the very present today, the snapshot of today, it's your balance sheet. It helps you understand those. But today we're talking about what happened in the past. And it's your profit and loss account that helps you to understand that. Let's have a look at it, shall we? So your profit and loss account can look back at any period in time. It can look back over what happened in the last week, what happened in the last month, what happened in the last quarter, last 3 months, or typically speaking, when we're looking at a profit and loss account, we're looking at what happened in the last year. Now, at the end of this video, I'm going to tell you why it's important for you to understand what happened in the last month. It's really important, okay? Because I want you to start using these numbers in your business and really getting a grip and controlling your business in terms of what happens. So let's have a look at the profit and loss account. Let's demystify it, understand what the various lines are within there. If you've got any questions at the end of the video, you want anything explained a little bit further, put a note in the comments below, contact me, and I'll be more than happy to answer your questions for you. So your profit and loss account is made up of these 5 main headings here. What we have at the top is our sales or our turnover. We have then our cost of goods sold, our gross profit, our fixed expenses or overheads, and then we have our net profit at the bottom. We explain what each of them are one by one, and then we're going to look at how we can apply them in our business. So first of all, one thing to remember, when it comes to your accounts, your accountant is the place you need to go to, okay, for the information you require. But oftentimes, accountants or the accountancy practices that are in the government can sometimes seem a bit confusing because the same word is used for different things. So, for example, your sales, which is what you and I know is how much we sold today, okay, through our till, or can be sometimes referred to as our turnover. It can sometimes be referred to as revenue within the business. Sales, turnover, revenue, it's the same thing, okay? One key distinction, though, is when it comes to your sales, we need to understand that if we sell over the counter, in other words, I say that's £2.50, please, madam, and she gives me £2.50, that's a sale. It's made. It goes into the till. That sale is made today, okay? If you, however, do a job for people and then invoice them, the sale isn't made until you delivered that invoice to the customer, okay? So when we're saying what were your sales last month, I'm not asking you how much work you did last month. I'm asking you how much did you invoice to the customer or how much did you offer a receipt to the customer over the till. That's what your sales are. Okay, in this business, £500,000 worth of sales in this example. Cost of goods sold, or you hear that as expressed as COGS, or cost of sales. And it literally is just that, the cost of sales. So if I sell something for £150, how much did it cost me to deliver that to the customer, whether that was the time I had to spend doing it, or the time and the materials. Let's say from an electrician, how much time did I spend doing it, and what were the cost of the materials that I had involved in that? Or if I've got a factory, how much did it cost me to buy in the parts and then pay the staff, pay the labor to put it together to make it? So if it cost me £100, my cost of goods would have been £100, even though I sold it for 150. In this instance, the sales were 500,000. The cost of the sale was £250,000. Does that make sense? So you get your sales and your cost of goods sold. Now, the difference between these two, so I took £500,000 from the customers. It cost me £250,000. Well, that difference, 500 minus 250, is what I call my gross profit. Okay, so it's the first time you'll hear profit in your profit and loss account. This is your gross profit, and it only relates to how much did it cost me to make or deliver that service. So in this instance, the gross profit is £250,000, which is the 500 minus the 250, £250,000. The next line then that we have to deal with is what we call expenses. Okay, these up here, by the way, are variable. These costs. The more I sell, the higher my cost of goods sold. Does that make sense? Yeah. So the more of these I sell, the more of those I have to pay for. Okay, to sell to my customers. These expenses here, these are fixed expenses. These are expenses I have to pay, whether or not I sell a single item or not. Okay, I can't think of the word. A single widget or not. Whether I sell a widget or not, or two widgets, I've still got to pay these fixed expenses. I've got to pay my rent to be in this office. I've got to pay utilities. Okay, I've got to pay for the broadband. And there could be, in larger businesses, I've got to pay for some admin staff, someone to answer the phone. It doesn't matter whether I sell or not, I've got to pay for these fixed expenses. They're often called overheads also. So overheads or fixed expenses, I've always got them in my business. In this instance, it's £200,000. We take the £200,000 away from the £250,000 that we had left here as gross profit. We take the £200,000 of fixed expenses. We're left with £50,000. That's what we're left in our hand. I'm going to use this like my hand like a net. Okay, that's what we're left with at the end. That's what we collect. Hence the net profit that we're left with in our business. Okay, so that's your profit and loss account. And what's really important to remember is that this figure here, this net profit, is the money that you're allowed to have out of your business. This is an area in which businesses get stuck and mixed up in because they keep taking cash out of the business. And they're taking cash out of their business without knowing how much profit they've made in their business. So really important for us to understand that this is the amount of money we can have out of our business. Let's just work our way back up this, just slightly up to this gross profit line here, and understand why this is important. You see, your gross profit actually tells you how efficient you are or how good you are or not at running your business. Depending on what industry you're in, there'll be a benchmark which you'll find from your industry body. You might find it on the Inland Revenue site, on the HM Revenue site. There'll be a benchmark for your industry as to what the gross profit should actually be in your industry. So try and find out what the gross profit margin should be in your business. Now, in this instance, it was 50%. In other words, we sold £500,000 worth of goods and it cost us £250,000. So half of it was cost. Therefore, we were left with half. We're left with 50%. Okay, so this is a 50% what they call gross margin. Okay, so 50% gross margin for this industry was standard. What is it in your industry? Are you there and thereabouts? Are you well above it? If you are, brilliant. You're running your business really well and your products are priced really well. If you're below it, maybe you're discounting, your products aren't priced as well as they should be, or maybe you're not as efficient as you should be in your production. Okay, so the beauty of your profit and loss account, because it's looking back, you're able to look back at what you did last year, last quarter, last month, and understand if you're doing things in the right way, if you're buying your stock at the right price, if your team are as efficient as they should be, or if your pricing is correct when you're making the sale to your customer. So vitally important that you understand your profit and loss account. And I said to you earlier that I'm going to explain to you why it's important that you don't just look at this at the end of the year. The reason is that we want to be in control of our businesses. We don't want to be in control just once a year and what happens in our business. We want to be in control every day, every week, and every month in terms of what's happening within our business. So what you want to do is promise yourself that at the end of each month, you're going to look at your profit and loss account. You're going to make sure that all the invoices that should be issued are issued before the end of that month, okay? And you're going to make sure that you understand exactly what your gross profit was last month and what your net profit was last month. That helps you to be in control of the growth of your business. With your software programs such as QuickBooks and Xero, it's really easy now to start to get these reports straight away. You can, with the click of a button, everything's up to date on your software. By the end of the month, you should, at the click of the button, be able to get those numbers. Or at the very latest, by the 10th of the following month. So if your business is slightly bigger, by the 10th of the following month, you should be able to produce a profit and loss report for the last month. So this is a simple tip to help you to start to get real control of your business. Understand your profit and loss account. Do not wait until the end of the year to understand whether you've made a profit or not. You need to know by the 10th of the month. Okay, so if you've got a coach, somebody working with you, they should be pulling you apart on that and finding out whether or not you have made a profit in the last month. So our next couple of videos, we're going to look at the balance sheet, which looks at where you presently are, but we're also going to look at forecasting, putting together a cash flow forecast, and also putting together a profit and loss forecast. So you can now start to determine actually how much turnover you're going to make in the next month, and you're actually forecasting how much profit you're going to make. And if you're forecasting that, what you can do is control all the stuff in the middle to make sure you make the profit. So I hope this video has literally been profitable for you today and helping you to start to get a grip on the numbers in your business. Look forward to seeing you on our next